All right, let's go. So what do we have? We have some updates here. This is going to be version 2 of the COT report. And nothing has really changed that much, but I have added a few improvements. So I wanted to just explain those in probably this 20-minute video or thereabouts. Okay, so I'll just go over a very quick summary here. This is my COT report. The first 3 tabs are dedicated to my own trading log. I got a dashboard here, which auto-populates all that information just to let me know how this is working, what the edge actually is over a period of trades, and what I should consider maybe improving or sticking to. So that's those. FX COT Master, we know that this is looking at a 3-year data pool collection taken from the CFTC legacy reports. Very easy to download, not difficult at all. It's a continuous rolling 3-year period. We can look here. This is July 2026, and it goes all the way back down to Swiss franc 2024. And this is probably one of the most important features that I have. It doesn't look sexy. It doesn't look interesting. There's no fancy, this is the trigger, this is how you get into a trade. But this is something that I don't believe a lot of people are actually covering. You'll probably get a lot of people saying the COT report is delayed, you can't really see it as a directional tool. That's true, but I'm really looking at this as more of a risk tool. And the more data you have, the more information is potentially at your fingertips. And this has probably been one of the single most important things that I've added to this COT report, and I'll show you the reason why in just a moment. The COT raw data is exactly the same as the last version, with the exception of one look-back window, which I'll just show you in just a moment. We still look at net COT, which is the previous week. Remember, as I said, the COT report is delayed. It comes out on a Tuesday, end of day trading, I think in New York time. So that's not made available to the public until 3 to 4 days later. And so by the time we then set up and get ready for the charts the following week on a Monday, this data is already a week old, especially by the time we get to Tuesday. So by the time we get to Friday, this data is technically 10 days old. So it's significantly lagging, of course. But, yeah, so what I do every week, as you know, I just simply, today is Tuesday, the 28th of July. The next report is going to be available to me on Saturday morning. I think that's the 3rd of August, something like that. So then I'll just simply take this, move that to 2 weeks previous, and then 2 weeks previous moves into 3 weeks ago. So I'm always constantly tracking in the dashboard the weekly FX signals, which is here, a 3-week period. But this information isn't just looking at 3 weeks data. This information here is also looking back at 3 years worth of data. Most importantly, it's telling me where it's sitting within its 3-year minimum and 3-year maximum ranges. The percentile level, column J, incredibly important. When you're looking at price action, you've got no idea, this pound US dollar chart, for example, you've got no idea where this is sitting relative to extreme levels, which is why I think this edge that I've created is incredibly powerful and very, very useful. Not for a entry signal, like I said, this isn't sexy, but it's important to know where the volume of data is pointing and suggesting. And what I found in extensive backtesting is that wherever this percentile range is sitting, You can see here that we are at the extreme short here and here for the Japanese yen, 8.83 for Japanese yen, 9.39 for Canadian dollar. What I found is once these percentile levels get lower than this to they're closer to the 0% of the absolute extreme level, it's like an earthquake. It's like a tectonic plate rubbing together for centuries. Over time, that pressure will build to a certain point where it can no longer tolerate, and then the release happens. Exactly the same here. The data suggests that once we get to these extreme levels, i.e. 0 to 5% and 95% to 100%, there is a sharp reversal away from these points. And you wouldn't know this unless you took all this data into consideration. And these are where the data points to as being the best entries. The conviction is most definitely behind you. So, extreme short. So what have I added here? This is the gap. So not only am I looking at a 3-year window of data, but I'm also looking at a 6-month window of data and where the 6 months sits relative to the 3 years. And likewise, whenever we get a gap which shows up of anything above or below 25%, so we've got way above 25% here for the pound, and also minus 36% for the Aussie dollar, this is an early warning signal that these currencies are moving towards their extreme levels. So we'll just monitor this week after week to see how these gaps play out. Okay, so that's the 6-month percentile, which I think is very good. And then if I take the Japanese yen and the CAD again as examples, these are primed. And like I said before, think of it in terms of an earthquake that's about to happen. They are so far stretched in relative to their 3-year levels that these are going to pull away violently in the opposite direction. That's not me just saying it. That's what the data supports and suggests exactly what happens. Like there's 100% guarantee that these are going to pull away violently, Canadian dollar and the Japanese yen. Now, if you notice, it isn't picking it up here in the 6-month window. We've only got minus 8.52 and minus 7% because this is only looking for a 6-month extreme. Relative to a 3-year data, it's not picking it up. That's why it's nice to have a window within a window. Looking at the 6-month, we can see pound, Aussie dollar, they're stretched. But relative to 3 years, it's not. Only these are. That's not to say we can't bear these in mind. We can. But I'd rather take a much longer look back than a 6-month window. Okay, currency scores. Hasn't changed too much. It's still exactly the same. Yeah, gives you a total score. What we like here is to see for continuation trades, we want to see the bearish builds or the bullish builds. And we also want to understand that for bearish unwinds and bullish unwinds, this means positions are closing for the open interest. Open interest is falling, and therefore there's probably greater likelihood for reversals for these. So that's the difference between the builds and the unwinds. Pair constructor, exactly the same. Nothing has changed here, apart from I've already added a little bit more of a unique description here for each one. So you're welcome to pause the video and take a look at that. Weekly FX signals. Now this is where it gets a little bit more interesting. Version 2, you'll notice that there's lots of colors and that may drive you crazy, but for my eyes, it just helps visually connect everything together. Directional buy, strong buy, and strong sell. I've color coded these orange and kind of like a darker off black, and that's simply to train my eye, because for bullish, I'm that same color, and for bearish, I am the darker color here as well. For red, I just keep that strictly for neutral, which tells me to walk away from that trade. Don't even look at Aussie dollar CAD for this particular week, so I don't bother. Step number one, most important area, is trade. Do we have a trade on? Are we allowed to trade? Yes or no? And we can see we've got a couple of quite a few tradable items, but doesn't necessarily mean we can trade all of them. Over here, how to read the dashboard. Step one, is it eligible? Trade or no trade? No trade, skip, don't look further. Step two, this is triage only. It tells you which trade rows deserve attention. Prime setup is before the watch list. Okay, so let's go back here. I and J. Okay, so now we take a look at these, the blue, which is why I color-coded it blue over there in the legend. Trade rank. Remember, the lower the number one is the best. Trade rank. The lower the number, trade rank is the best. Conviction score, the higher number is the best. They do two separate things, but we're just paying attention to trade rank and trade status. So, pound US dollar, trade rank, 8, not great. Trade status is watch list. What we probably want to be looking at is one where Euro US, for example, trade rank 2, prime setup. So this supersedes that. We could also look at US dollar Japan, and then we can look at the secondary. So these are the ones we pay attention to the most. We simply don't neglect these, but we want to make these our priority for the potential setups this week. Okay, so that's step 2. Easy. Step 3, signal versus fuel. Is the currency you're implicitly short about to squeeze against you? So if you're buying, so for example, if you're longing Euro US, you want to know, no, sorry, we're shorting Euro US, aren't we? Yeah, strong sell. So if you're shorting Euro US, you want to know, that means you're giving conviction to US dollar strengthening, right? So you want to know, what is the euro doing? Always look at what the sell leg is doing. You are selling euro in favor of buying US. So that's why you are strong selling. What is the sell currency doing? And this is where we look at signal versus fuel, which is here, column N, which is orange. And it's here. Caution, euro is near the extreme. The fuel leans against it, which basically means it's probably choppy. There's no fuel to take it in a solid convictional direction. Doesn't mean you can't trade it. It just means at the moment, because of the net COT positioning, the data that's coming in, and also the open interest, it's not moving in any substantial direction. Okay. And we'll look at the Euro US chart in just a moment. And then after this, okay, there's step 4, the long leg extremity, the mirror check. Is the currency you're implicitly long already overextended? Now, unfortunately, we don't have US dollar on the COT, so that's why we have no data here because there's simply no data for the US dollar. That's not the same case for Euro Swiss franc, for example, or Euro New Zealand, because we do have data for those two currencies, but for the US dollar, we don't have, so we can't check that off, so we just have to skip that one. And then we go here, combine N and O as one verdict, not two separate ones. If they're both clear, full conviction, size normally. Either one flags something, downsize or wait for stronger price. So column N and O, let's take a look. So you combine this and this for Euro US. We only have one. We can only look at this as being cautionary. Fuel isn't quite against it. It leans against it, I'm sorry. And then for the last one here, we've got crowded flag. Positioning read. These explain N and O. They don't add a new position. Read them to understand why the verdict is what it is, not to argue with it. So now we need to go to K and L, the positioning. Okay. And that's these two here, the purple ones. K and L, Euro US. There we go. So at the moment we're chasing. Euro is short, bearish build. There's a high crowd of participants, which means that's why it's caution. Euro is at the extreme level. There's no new fuel currently, and US dollar is a bullish build. So at the moment we are heavily with the short crowd, but there's no new fuel to drive it. So let's take a look. Let's put all of this into the charts. Euro US. So strong sell for the directional bias. We know that as well. But if you take a look at what's happened from the end of June all the way through to pretty much the end of July, if I was to draw a line from where it was the end of June to the end of July, it's barely moved off of that range. Gradually it's moved up and pulled back from a weekly fair value gap, but you can see that there's absolutely no fuel to drive it in one particular direction. It's not like a nice strong conviction move here or here or here or here. It's range bound. Caution. Euro is near the extreme. Fuel leans against it. No new fuel. It's coiled. There's no decisive direction just yet. The overall projected direction is a strong sell, but there's nothing substantial to take it into this direction here and to see it push downwards. That's the fuel. It's not there. So I have just taken a short trade on this. It was on a H4 time frame because it is the prime setup and I did like it. And it was a win. But let's take a look at maybe another one, shall we? What else can we look at? US dollar, Japan. Maybe we'll take a look at this one. So first of all, what do? Let's put this into practice right now. Let me just take a look at this a minute. Oops. Yeah. US dollar, Japan, strong buy. Okay. Step one, trade or no trade. We have a trade. Step two, which is up here, column N, opposed. Now, this is something we do need to take action on because if you remember, I told you that the Japanese yen currency is close to the extreme floor. And what usually tends to happen there is it's that earthquake analogy again. So we've always got to be aware that this could turn suddenly against this strong buy. Crowded. Oh, sorry, no, step three. Where was step three? Did we have step three. Directional bias is a strong buy. There's no data here for the long leg extremity, so we can't check the sell for this one, unfortunately. The long, we can't check that one. We get a trade grade of C, which isn't great. Crowded, Japanese yen shorts are still building, and we're chasing this. So even though it's a prime setup, take a look at Japanese, US dollar, Japanese yen. There, daily chart, you can see that this just hasn't stopped. This is why we're getting that chasing flag, because we will be completely with the crowd and entering new longs here. Yes, it may play out, but the simple fact is, because it's so close at the extreme level, something is going to give sooner rather than later. So you just got to size accordingly. That's not to say it's not going to continue going up, but it's getting close to that breaking point. Okay, so that's US dollar, Japan. Strong buy overall, but just be aware that the Japanese yen is close to the extreme level. And I think that's pretty much it, really. So what have I added with this from last time? Column L was still there. Fuel check, that may not have been there. What we're looking for, the ideal setup, I wonder if I've written it down here. What good looks like? Aligned, no fuel conflict, crowded flag, blank, you're not chasing or mixed, which means you're getting in early. Conviction, plus 12. Conviction is rising week on week. So you'd monitor that, for 2 to 3 weeks in a row. The weak leg is mid-range, 20th to 80th percentile. Price structure agrees. There's a breaker structure in my direction. Entry from a discount premium level. And there's no central bank meeting on either side of the leg for 5 days. So that's what a great setup looks like. So, yeah, fairly long video. A lot of information to take in. But this is how I approach my swing trading each week before I even go over to the charts. I'm looking at what do we have that's looking good. So right now, pound US dollar, Aussie dollar US dollar, pound Aussie, US dollar Swiss franc, and that's about it. Yeah, hope that helps.